Good day, I'm Martin Gale with Market Radius Research. It's Wednesday, November the 16th, 2022, and we've got CEO Dave Harper of Geodrill joining us. Geodrill provides drilling services to the mining and mineral exploration industry in West Africa, Egypt, and South America. Geodrill just announced record Q3 financial results with revenues up 29% year over year, EBITDA up 96%, and earnings up 100% to 3.6 million or 8 cents per share. And Dave's here to discuss the results. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Dave, thanks a lot for joining us. And can you give us an overview on this excellent quarter?
Well, thank you, Martin. Thank you for having me on your show again. It was, as you've just pointed out, it was an excellent quarter. It was actually our second highest ever quarter two in the history of the company, which is exceptional when you consider that this is actually normally a seasonally weak quarter for us. So, speaking to the 29% year-over-year improvement, I would just add that quarter three last year was already a 44% year-over-year improvement. So any improvement over that is an exceptional improvement, I believe. And the other point I would just make is that the net income was impressive. It was actually 10% of revenue, 10% of revenue. So it was up from 6% in quarter three 2021, but it was an exceptional quarter. I'm very pleased with it. Thank you.
Yeah, and you had a very nice uplift in your gross margin as well. Is that just from general economies of scale of getting bigger, or good pricing environment? You cleaned up your operation, or not cleaned it up, but just sort of streamlined operations?
It's economies of scales. As you get more rigs out in the field, you've got basically more rigs, contributing to the revenue base, and then your costs. Some of your fixed costs are basically defrayed across a larger base of revenue, and so your GP improves accordingly.
In the last quarter, over the last many quarters, the foreign exchange has been pretty bumpy and exciting in those markets. Has Geodrill, you bill in US dollars, has that, and you've got other expenses, but there's oil and so forth. Has the foreign exchange rate made a material impact on those results?
Well, we drill mostly for USD. We report in USD. We do have some exposure to some French West African countries, the currencies, the CFA, which is linked to the euro. So we do have some currency exposure, but for the most part, we drill for USD. We report in USD. Most of our costs are in a basket of other currencies. So, yeah.
Your SG&A, it increased a fair amount with it, but you also expanded your footprint.
Well, I think if you look at what we accomplished through the quarter, we've added some new contracts, and we've had a geographical expansion into a new South American country. Now, all of that, takes time, resources, and I think that's what you're speaking about there. The increase in SG&A during the quarter, and no cause for concern.
Yeah. Okay. Because how long have you been in South America for now?
Be 2-3 years, chugging away in Peru, and we had a call to come down to Chile and have a look at a program, a very interesting project for a customer that we'd actually previously drilled with in West Africa, and it was a special call. What they want to accomplish is some deep directional drilling, and I believe they were struggling to get someone that could actually deliver what they were looking for. We had previously delivered that service to them in West Africa, so it was very much from a previous relationship that emanated, and we're there now drilling, and it's going very well. That's all I can say at this stage, is it's going very well.
Excellent. With your customer base, you're working with miners as well as exploration companies. Just can you give a broad breakout what percentage of businesses with like mining companies that are expanding resources versus just exploration companies trying to find resources or get a resource estimate together?
I'd say it's about 75-25 at the moment. about
75
75%. Yeah, about 75% minor, 25% either junior or intermediate. That's what we call an advanced junior or a minor in the making. That's a junior that's made a discovery that's partway through a DFS feasibility study. But for the most part, we have recurring revenues that we can kind of pretty much bank on from our long-term contracts, which are basically with the senior miners across a variety of jurisdictions and across a variety now of commodities, as we're not only drilling for gold, we're also drilling for EV metals, and we're drilling for base metals.
Yeah. You announced as well you got some more contracts in Egypt. You started Egypt off with a large contract with one mining company. Are those other contracts with the same company, or you're diversifying your client base in Egypt as well?
Great question. No, we're very excited about what's happening in Egypt. We started there just basically in Q3 a year ago with one customer and 2 rigs, and rather more quickly than expected. We had expanded that to add another customer, a big senior miner in Egypt. And we secured in Q1 of this year. So having only just been there for 3 months, we secured the largest contract in the history of this company, $54 million with Centamin Mining, providing drilling services in the underground diamond drilling. And more recently, we have secured another 2, possibly 3 new customers. So we're expanding our customer base, our operations base, the services that we're offering. We're now working for juniors, we're working for miners, and we're working underground. So, yeah, look, honestly, we couldn't be happier with Egypt. It's going very well for us.
Your rig utilization rate was 75% in the quarter. I think it's the same as it was in the last year's quarter as well. I believe you did expand your rig fleet a little bit through your own rigs as well as renting some rigs. I don't know, just can you expand on your utilization rate and how you see that going and how you see rig expansion progressing through the coming year or a couple of years?
Yeah, so it was around 70-75% through the quarter. That's pretty much a constant. It gets up to 80, it drops down to 70, but it's kind of generally in the 75% region. Yeah, I mean, utilization is strong, and as the customer base grows and the demand grows and the rigs become more utilized, when we get to 70%, it's been a natural function of this business since the get-go, actually, to when we hit 70% utilization, we add rigs. We don't wait until we get to 100% and then disappoint our customers. If you look at this business from 25 years ago when I started with 1 rig and 1 contract, it's always been a story of just keeping the customer satisfied. And we're certainly not going to do that if we run them out of rigs. So when we hit the 70% utilization, that's when we just start looking at what rigs are now where we need to basically put capital to work from cash generated from operations, and then we add rigs as a natural progression as things evolve. We will continue to follow that model, which has worked so well for us for the past 25 years, and will continue to work for us that way.
Yeah, your business is an asset business, and I believe you hit 100 million of book value. You're around that area. Have I got that right?
You're absolutely right. We actually hit that number in the previous quarter, and when we closed out. That was in Q2, and in Q3 we've already closed it out with 103.5. So it's that needle is moving very quickly as we continue to generate cash from operations and then reinvest into the asset base, which is basically the rigs, all the support equipment that support the rigs, which in turn grows our revenues, grows our EBITDA. Everything moves up in lockstep. You look at the last 5 years since 2017, our rig growth, our revenue, and our EBITDA has pretty much moved in lockstep at a CAGR of about 9%.
All right. Your CapEx is substantial. It's around $12 million for the last 9 months. How much of that is sort of sustaining capital versus growth capital of adding new rigs to the fleet and new other equipment?
In the so year to date, we're currently at about 75% expansionary capex and 25% maintenance capex. Generally, in any given year, it's usually about 50-50. At the moment, we're just on a bit of an expansion drive, and so we're investing in the future.
All right, you are a cash flow and dividend story. Looking at your financials, I'm guessing you're kind of at about a 1/3 payout ratio, or about a third of your free cash flow is going to dividends. What does it take for your dividends to increase? At what point do you say, hey, you've got enough cash flow where you can up the dividend without having to having much of a risk of scaling it back in case there's a downturn?
Well, it's a good question, and I just don't have an immediate answer for you. I think what we do is we get to the end of the year, we have a look at what opportunities lie ahead, what our capex requirements, what our customers' needs, and then we look at that, and then we of course take into consideration the fact that we have shareholders, and they obviously some enjoy dividends, some don't actually. Some would prefer to see a dividend, share buyback. I'm indifferent. I think the best use of cash for us is actually just to continue to grow the rig fleet, keep our customers satisfied. And if we do that, we will just continue to grow this business inexorably towards what will probably become in the next few years 100 rigs and, I don't know, $200 million in revenue or whatever. So I'm sorry, I just don't have an immediate answer for you at this point in time. But I think with the dividend, we will, where we seem to have found a sweet spot at the moment is about a 2.5% yield. Most folks would say that that's, it's substantial, it's substantive enough to, basically catch one's attention in terms of a reasonable dividend yield. At the same time, it's a good balance between, leaving the cash in the business to continue to grow the business. And we've always got funds on hand should we need to use that share buyback, in a situation where let's say, for instance, the market capitulates or whatever. Always good to have, a bunker of, not suggesting a war chest of cash, but I think it's good to have a bit of cash there for a rainy day.
For sure. And I guess finally here, we talked about South America and Egypt. How's West Africa? Obviously, that's the heart or the core of Geodrill. Obviously, business is going there as well. Can you give any insight into or a little bit of nuance into what the economies are doing there, what the drilling is, what the producers are doing in that region?
We don't get too fazed by what's going on politically around the place. We just drill holes and try to make some money and do everything, to the highest international ESG standards along the way, and, put something back into the community, develop, a workforce, create employment opportunities. The West African landscape is just I think, the gold production profile in West Africa just continues to grow. If you add up 7 of the producing nations in West Africa, you'll be shocked to know that is that 450 metric ton is being produced now in 7 of the 12 West African countries. And if you look at that geographical footprint, it fits inside of China, the largest producer in the world, twice. The point I'm making is that anyone that's not in West Africa is missing a substantial piece of the pie, and that's why we're here. Now, we've got to look outside of West Africa and say, well, do we, where, as we grow this company upwards and outwards, where do we want to be? Do we want to leave all of our eggs, in one basket, West Africa? Probably not. That doesn't make sense. And so it's good for us to be in South America. It's good for us to be in, growth markets like Egypt. But I do think the West African market will continue to be our bread and butter market, at least for the foreseeable future going forward.
Is there, obviously, West Africa is a huge gold district. You mentioned battery metals, and gold and copper are often in the same deposits. Is there any more general explicit interest towards non-gold mining in that region, or is it gold with whatever happens to come along with it?
It's opening up and it's opening out. It has always been considered the Gold Coast. You know, Ghana was actually, before it became Ghana in 1957, when they got independence, was actually known as the Gold. It was, the country was called the Gold Coast. That's because there's a lot of gold out here. But, you know, there's also, you know, there's iron ore, there's base metals. There's a number of very interesting EV metal plays going on around West Africa between Ghana, Atlantic Minerals, and up in Mali, you've got 2 or 3 lithium producers in the making. Battery metals continuing to, you know, be an exciting part of our business. It's actually, you know, it's probably 10% of our business these days. There's also some other interesting things going on, polymetal type things that people are talking about. We're actually currently talking to some people about some, at least some significant sort of opportunities outside of the gold space in West Africa. I can't say too much about that just on this call just yet, because things are in the works. But you know, there could be some interesting things going on at Geodrill in that regard.
All right, Dave. I don't know. I think we hit the high points there. Is there anything else you want to add before we wrap things up?
No, that's it. It was a great call. It's always good catching up. Martin, thanks very much for your time and for your audience's time.
Dave, thanks a lot for giving us the update. Congrats on an excellent quarter. And actually, just the Q3, which we just went through, that's seasonally a bit of that's often a rainy season, and Q4 is one of your strongest, or is it possibly your strongest quarter typically in the year?
No, actually, that's it's good that you mentioned that. It was a very peculiar wet season in that the rain actually didn't come. It actually came in the final fortnight of the quarter.
Oh, okay.
So yeah, it was a great quarter, but it was somewhat skewed by the fact that the rains didn't come. Now, this will affect our quarter 4 at this point in time. I would expect we're going to have a flat quarter 4. At worst, it'll be flat. No cause for concern. We're still on track to put in our best, we're coasting to what will be our best fiscal year in the history of this company. And so, 3 solid quarters and 1 flat is still a pretty good result, I think.
All right, Dave. Well, I appreciate your time. Thanks a lot for joining us, and we'll talk to you again in a little while when we get the year-end results out.
Always good catching up. Thanks. Cheers.